Good morning, good morning, good morning. It is Tuesday, the 20th of September, 2022. Thanks for joining me this morning here in Chicago time, 8:02 a.m. This is episode number 2318. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. One of the first things I want you to notice this morning is the rotations. Rotations. The rotations have gone up except for the Russell, both in range and in the rotation size. The Russell's kind of stayed behind with everything else moving up. ES moving from 76 in range for one standard deviation to and from 76 to 80 and from about 7 to 7.5 in rotations. We're seeing wider rotations, wider ranges with that drop after CPI last week. Same for the Dow and for crude. The overall market posture is risk off, just mildly risk off. The S&P pushed yesterday's high, which was at 1875, and squeezed it to 39.36. We see that crude is pushing higher today after testing a major swing low just below, missing it by, what was it, maybe 30 cents or something. Crude really rallying yesterday and putting in a wide range day, but overall, we'll look at crude in a minute. But across the board, we're seeing risk off. We're seeing gold coming off just slightly. Silver, same. Gold is, gold's just not getting anywhere. The dollar's really, really strong. The dollar pushing 110 the other day, which further leads to headwinds for U.S. equities and feeds into the sale. Looking at crypto, man, look at that Ether just getting hammered. Remember when it was 4,500, and Bitcoin's at 19. Looked like it was trying to bounce last week or the week before, trading 21,000, 22,000, but really can't get off these lows. The main news really, Canada shows a reversal inflation in August. A surprise from Canada. Canada's inflation year on year for August was expected at 7.5, came in at 7%. 7% month on month was expected to rise 0.2%. It fell 0.3%. Canada had a 0.5% reduction in inflation in August. That's pretty outstanding. Core inflation came in at 5.8% versus 6.2%. Those are numbers that the U.S. definitely could envy right now. Building permits and housing starts came in. These are high-tier numbers. Building permits came in lower than the expectation, indicating a softening market. 1.517 million versus 1.63 million in building permits. Excuse me. Housing starts came in stronger at 1.575 million, was expected at 1.42 million. So we do have ECB's Lagarde at 1 p.m. We have the API crude inventories at 4:30, and the Reserve Bank of Australia's Bullock speaking this evening. The Swedish Riksbank pushed interest rates higher by 100 basis points, exceeding what the market was expecting. German PPI came in this morning, just a real blast there in the German PPI for August. Came in at 7.9%. Get this, the expectation was 2%. Came in at 7.9%. Just tremendous. China's working on easing restrictions in Hong Kong, and of course the market is in a holding pattern really for FOMC tomorrow. Tomorrow we have the FOMC rate decision release at 2 p.m. Eastern. Be there or be square. Really going to drive today and tomorrow's action. The FOMC press conference at 2:30 Eastern, and then we have the Bank of Japan in the evening tomorrow. So lots of stuff going on with central banks this week, all together. So again, that's where we stand. Really risk-off sentiment. Looking at the S&P, finished strong yesterday. Really an outstanding push higher after chopping around for a lot of the session and finished near highs. The S&P finished strong, and then the overnight session pushed higher as expected. The S&P is traded 258,000 contracts, put in 51 points of range. The inventory is 32% short, 32% more short than long in the inventory, and the point of control at 39.25 and a quarter. Looks like it might shift down into yesterday's range at 38.91ish. It looks like it wants to shift down probably before the open, expecting it to drop to 38.91. So bringing us back into balance. So that's where we stand. The range almost exceeding down here, almost exceeding the what we consider normal, which is 53. The edge of normal, I should say, not normal, but the edge of normal. 53. We came in at 51. It might continue to sell off into the open. And so that's where we stand. Okay. Let's take a look at the charts. The charts tell it all. Let's take a look at the big picture. Here's the S&P on the market profile. Nope. That's crude in the market profile because I was commenting on crude on the convergent chat room. This is the S&P. Come on, boxes. What's up with these boxes moving? Just can't keep a box down these days. All right. And then this one moves here. Actually, this one is meaningless at this point, so let's get rid of it. So the S&P was making a nice run towards the 4150, 4140 balance. If you remember those numbers, 4150 being key up here. It's making a nice run for it. CPI comes in, gives us this big gouge in the profile. We were not able to push into the prior balance up here, again, based on 4150. And we've been one-time framing down until yesterday, which busted the one-time framing down yesterday, opened at lows, finished at highs. Yesterday was somewhat of a reversal day. Mostly balanced yesterday, except for the close, but we finished pretty strong yesterday. We finished on the high print yesterday at 39.1875. Very strong, and so it brings us into this range. So we have cleared, as of yesterday, we've cleared this 3900, 3905. You've heard me talk about 3905 and 30. How do you like that 3? Wow, that's a very artistic 3. And 3900. These are the key. This is the gatekeeper right now. And we cleared that. And so we've moved into this upper distribution, right? We started to move into this box distribution here, back into the range towards the 4,000. And then the overnight session, however, could not hold on to those prices. If we look at what it did in the overnight session, let's go to the intraday chart. So you can see here, big swing down on the CPI, follow through, an attempt to take out this high and hold, failed, right? Almost like an inverted head and shoulders here. It would have been something like this with a pivot line right here. So you have this pivot right here at 40.34 or so, and it failed to do so. And then we finally pushed through, well, not CPI, CPI is here. We finally pushed through, and then CPI comes along and really screws up the party, pushing us to these lows below the 39.05 low. We consolidated down here for a day or two, and we have a reversal yesterday. Let's zoom in a little bit to see it better. We have a reversal yesterday, so you can see the profile was mostly contained down here yesterday. Very, very balanced trade. And then we ended up pushing in a strong breakout to the long side, and then creating another distribution on the close and finishing on the high print yesterday with settlement at 39.17 and a quarter. The overnight session, however, couldn't hang on to these prices. Look at what the overnight session did. It went and it tested this balanced days VPOC, right? So when you have balance like this, the VPOC and the value area are important. When you don't have balance, the VPOC and the value area don't mean diddly. The VPOC does somewhat, but there is no value in a price discovery profile, in a trending profile by definition. And so we push into this naked point of control, and then we immediately sell off. And now we're below the day references, the mid and VWAP for the full session. We have pretty good separation between mid and VWAP, which tells us that the open is likely to be pretty aggressive, and we've left the point of control behind at the top of the range, and it looks like we're building a point of control, a high volume node down below. I expect the point of control to shift down here. So what we've done in the overnight session is to go and test the balance from Thursday, and then to check the balance from Thursday, get up above 39. You know, the big number yesterday to watch was the 39.05 right here. We tried to test it the night before in the off hours. Basically a double top there. We finally bust through, pull back. Look at that. Pull right back to 39.05. Nice little setup and giving us a closing run. And it ran, it ran a fair amount. And then now we're quite weak, and we are back into this balance. So what we are doing is we're building a two-day balance, right down at the bottom. The two-day balance, let me give you that 1 second. Trying to give you the point of control of this two-day balance. 1 second. Okay. The point of control of the two-day balance is 38.86, 38.8650. So that's the that's really the magic price, which is right here. So what do we have in this map? We have a very, very clear line in the sand right here. Okay, so on your stock zones, it shows up as a key level. We have the magnet right here for the immediate session, and then we have a double bottom down here, a triple bottom really, on the week. So the weekly low held yesterday on the open. The IB low yesterday was right above the weekly low, in case you didn't notice. The IB low was 38.53. The prior low was 38. The IB low was 38.53 and a quarter, and the IB low was 38.53 and a quarter. The prior low and the weekly low is 38.53. So we have a very weak bottom. Okay, so now we're back in a range. If we push through this range, this is a very, very key test area, and and an important push. Yeah, the alert you hear is for crude. So it just brings my attention to crude while I'm watching the ES for setups. Just means something might be setting up. So what we have here is if the market does not sustain these prices down here, and especially if it doesn't hold. Do you remember the level yesterday that I gave, 75? I said if it doesn't hold the 75 early on, then we are very likely to push through to the upside right here. The 75, 75, 75, 75, 75. The overnight session, 75. That's, again, the magic number today. If it does not hold the 75, I am looking for a pullback to short, looking to get short. The X is the short spot, as close to 75 as possible, targeting that 38.53. 38.53 and expecting it to bust through and make its way through to the 38.20. So now that we've pushed through 39.05 yesterday and we're not able to hold that overnight and we're back in balance, the thing for today, and today is not one of those, hey, be conservative, watch your risk. Well, you should always watch your risk, but today is one of those days where we have to be focused and attentive because we're likely to get some pretty decent setups today. We have, again, I'm going to go over the map. We have a very clear line at 05. We have balance at 86, and we are dead nuts on it. We have 75 as the value area low and the over-under on the profile. And then we have a triple bottom for RTH at 53. Okay, so here are the if-then scenarios. I'm not going to draw them. The if-then scenarios are: if the market becomes, the market's already responsive, it has come back to yesterday's balance. If the market starts to become initiative from yesterday's middle, then we're looking to see how it responds at the 3900 and the 05. Remember, the 3900 is a century figure, always important, and the 05, which is a price action figure. We're looking for a reaction at 39.05. If there's a setup to get long, then the 05 is going to be a very important scale out area. Probably the 3900 is a good scale out area to get risk off, and then see if it busts through the 05. If it busts through the 05, then we have a pullback for a gap to settle trade. So now the setup becomes gap to settle, goes to 05, pushes through, pulls back to 07, 06, and you see it's not able, it's getting a nice little trampoline kind of bounce. Then we're looking for a long 06, 07, 08 into 17 with about 2.5 to 3 points of risk. That's one setup. If it takes out the prior settle, then you're looking for the overnight stat. The overnight stat's way up at 36 up here. That's the overnight high. And that brings us back into Friday's range, which is also balanced. So then we start to look at Friday's range and we determine what our value area for Friday is, probably somewhere in here. And that becomes the next target, the value high. So that's the bullish case. Again, I'm not going to draw it. It's important for you to remember these prices. The bear case, the sell case, is it opens, tries to be initiative because we are already in balance, tries to be initiative into the 05, doesn't get anywhere near it, goes to 96, 97, it starts to peter out in this 96, 97 area. If you look at the overnight, you'll see there's some activity right in here. 96, 97 starts to roll over into and starts to roll over on the retest. We're looking for the short back to the POC, yesterday's point of control at 86, aiming for 75. So 96 to 75, about 20 points, aiming for 75. The hope for shorts is the 75 gives up. If it does, we really have some air underneath us. and it's likely to move to 53 very quickly if it breaks the 75 and gets into those excess prints from yesterday, which started at 70.50. 70.50, here it is on the profile. You see this single prints right down here? Sorry, yellow on gray is not a very good look. But if it gets into the below the 70, then you're looking for 53 at that point. This is an opportunity for me to add. So I'm looking for it to get to 75, bounce, do its thing, you know, threaten. It's heavy bids, thin offers. You want to get out, but you shouldn't. Drops through the 75, pushes towards the 70, clears the 70, the smallest pullback, looking to throw some size on or to add quantity on, aiming for 53. So add enough to drag your average. I'm going to add enough to drag my average a little bit. I'm using existing profits to fund the trade, and I'm looking for 53. I'm going to work 54, and if it breaks the 53, it could run a while. Don't get too greedy here because FOMC. It's hard to commit. Now the market's already pricing in an 80 to 85% probability. I think it's around 80% for 75 basis points. Not likely to change that before the FOMC. But if it does have legs, if the selling has legs, which I don't expect it will, then you're looking at 20 as the next key target. Imagine 96, 97, all the way down to 20. So those are the two key pieces. The third scenario is complete and utter balance, totally sideways. We are back in balance. We're inside of Friday's range. We're inside of yesterday's range, and we're just chopping around. We might break to 75, go to 70, come back to 86, push to 95, and just sit here because of the FOMC tomorrow. Those are the three key scenarios that are in play. Remember your price map. Bulls, 0005. You're looking for settlement at 17 and a quarter. You're looking for the overnight high for the overnight stat at 36. And then beyond there, you know, it could push to the key figure actually up here is 39.50. It's key price up here, 50.51. That would be the next target. Now let me put it on here. 51. That's the bull case. The bear case is 86. Chop, 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 chop. Respond. 96.00. Has a hard time. Fails. Comes through the open again. Breaks down into 75. The 75. Chop, chop, chop. Tries to bounce off the 75. Gives up the 75. 70 and a half is where the excess low starts. So if it takes out the 70 and a half, very quick ride to 53 is what's expected. And if it gives up to 53, then we're looking at 20. Let me tell you something. If you're not thinking, regardless of your CCIs, RSIs, and MACDs or whatever, if you're not thinking in the form of this is the territory and here are the moves that can happen, you're really missing it because you're dependent on an indicator that does not care about context, and the market trades with context. There is a purpose to the market, and this is what we're discussing here in the Trader Bite every morning. So use those indicators, use oscillators to get your entries or to see where you can get an edge, but really understand this. Take a moment, take 15 minutes every day to do this homework that I'm sharing with you, and that way you can avoid the frustration of what the heck, why is it doing this? You know, my RSI is at 95% and this thing keeps going higher, and it turns out it was imbalanced and it's breaking out. It's initiative buying and you're trying to sell that. It's hard to stick with those over time if you don't understand the price map, and that's what I've been sharing with you here on 2,300 episodes now plus for about 10 years. Hopefully it's sinking in. Okay. Good luck. I'm going to be talking more and more about these event contracts. Yes, some people see them as gambling. You know, they think this is kind of a gambling thing. But really, I see them as a lower risk way for people to stay in, to keep trading their opinion. So I'm not advocating that this is a big thing for everybody, but these don't have, you don't necessarily need to stop your betting on an event. Yes, these are binary in nature, or you can argue that they're binary in nature, but I believe they're a low lift, they're a lighter lift for traders who are struggling or don't have the time and can just look at the strike prices and place a $20 maximum loss bet, not bet, opinion on an event, including the S&P. You can get more information at itrade.events. This is sponsored by EdgeClear. EdgeClear is a launch partner for the event contracts with CME Group. I'll catch you tomorrow morning. Take care.